Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 191. Now, in today's episode, I want to share with you why trading iron condors is much easier than trading stocks. And we're honing in and focusing on iron condors because of our upcoming course that's set to release on the 16th of July for Options Mastery, Trading Iron Condors. So with this in mind, why is trading iron condors easier than trading stocks? And you might be thinking, well, you're kind of crazy to say that because trading options is much more difficult. And overall, yes, it is more complex when you look at overall all the components that go with it. It's much more complicated to go ahead and trade options because you're looking to learn, and the learning curve and the amount of knowledge you have to learn to trade options is much more so than you have to learn to trade stocks. But in the end, once you have that knowledge, it actually becomes easier. So think for a moment when you've learned to ride a bicycle, okay, and you're trying to go uphill and you're just brand new to riding a bike. Okay, as you're learning to ride a bike and you're trying to go uphill on those one-gear bicycles, okay, it's much more difficult to go uphill simply because you don't have the extra gears to go from low gear to high gear and switch based on the conditions. It's much more difficult to actually learn to ride a mountain bike or a bike that has gears and shifts and paddle shiftings and those kinds of things. So that way you can go ahead and make it uphill. But once you've learned how to use the gears, it makes it much easier to go uphill. Okay, because now you can go ahead and shift and make it a lot easier for your body. And this is what option trading is really like. It's initially, it may seem like it's much more difficult. You're trying to climb that mountain. You're trying to go uphill. But that's because you don't know how to shift gears. You don't know the techniques that you need to use. But overall, it's much easier. Once you do know how to use it, it's much easier to go ahead and trade options or iron condors than it is to trade stocks, at least if you're more actively trading. So let's take a look at how this applies overall, and I want to share with you another example here of why it's really much easier and why you can really do this. It's just really about giving you that extra little bit of knowledge, and that's really what our course covers, is it's giving you that extra knowledge to getting you to understand how to use those gears appropriately. So let's take a look here as we look at a trading screen. And when we look at picking stocks overall and compare this to trading stocks, you can see that as we take a look at Apple, okay, do we know for a fact that Apple's going to go up tomorrow, next week, next month, or next year? It's very difficult to know. And as you start looking through this list of stocks, you're trying to pick out some stocks that, hey, which ones are going to go up? Which ones are going to go up and which ones are going to go up the fastest. Now that's typically the way you make the most money, picking the right stocks at the right time and letting them run higher. But it's very difficult to do that because you really don't know which way a stock will go. But let's take any stock, for example. Let's take a Microsoft or a Netflix. Okay, let's go with a Microsoft. And do you think that you could pick a range where in the next 30 days, 60 days, 120 days, it's up to you what range you want to choose, where that stock will fall and land on? Well, let's say you choose a range somewhere in between, and you can choose a range maybe between 110 and 90. Could you choose that? Could you go ahead and make that choice and decision? For most people, yeah, they could go ahead and choose that decision. What about if you think, well, it's been heading higher, maybe you'll choose somewhere between 95 and maybe 115. Maybe you'll choose a little bit of a higher range. Other people may go ahead and say, well, it's not acting very well. Well, maybe 105 to 90 or even 87. So maybe you'll choose a little bit of a lower range. So don't you think that's a lot easier than just choosing a stock? And yes, stocks do have their own place in investing. When you go ahead and build out a portfolio, they're more of a longer term investments where you kind of set it and forget it. But when you look at active trading, when you look at trading options, for example, it's much easier to trade or choose a range than it is to say, hey, this stock is going to head higher or this stock is going to head lower. In that case, that stock needs to move. But in this case, if you're looking at a range, well, that stock just needs to hit somewhere in that range, in that bullseye. And most people, they get a little bit confused about how you can do this or how you can trade a range. And all you're really doing is selling two verticals or selling contracts on these ends or areas, which is another word for insurance. You're insuring the stock at higher prices and insuring it at lower prices. And this is how this works. You can do this on any popular company that trades options like Netflix. For example, let's take Netflix. Do you think that Netflix is going to be higher or lower in the next couple weeks? Well, you really don't know. There's a lot less certainty in that than do you think you could choose a range for Netflix in the next couple of weeks? Let's say somewhere between 480 to maybe 340. Now that range is a lot easier to go ahead and choose. You might think, okay, well, Netflix is a little extended and now it's acting weak, so maybe it's 450 and 300. You might choose a lower range. Or maybe you believe in the stock and you say, okay, well, maybe around 360 and 490. You could choose a little higher range. So that's a lot easier. So take a look at how you can really do this and do the setup, okay? So let's say we go to Netflix and we're kind of neutral on the stock. And I'll go ahead and choose my IRA one just so it's clean. And you can see right here we can go 45 days out. So here's our option spreads. I go ahead, type in the ticker symbol. I go ahead and now choose, do I want to go 45 days out? If I go a shorter duration, that means I get less width for my time value, meaning the closer you go in time, the less money you make, but the stock can wiggle around and move quite a bit. So let's just start out with 45 days as an example, and we'll go out, let's say, to what range do I think this will be in? Let's say you can go 320 and maybe 450. Okay, so somewhere between 320 and 450 in the next 45 days. Okay, so I'll go ahead and set up a vertical over here. I'll sell a vertical at the 320 and buy one back at the 310. Okay, so that's one side, but now I'm directionally biased. Okay. And that would be similar to a stock. And let's say around 450, okay? So again, we'll sell a vertical over here. Okay, we'll go also 10 points, which is, you know, we're just setting up kind of a spread. And now you can see that range in the next 45 days, as long as that stock is between 320 and 450, I go ahead and collect $294 on $700 of investment. Pretty good return on investment, right? So when you look at this and you say, hey, well, can I choose a range that the stock will move in? Well, you might say, hey, well, that's a lot easier than choosing stocks. And absolutely, it's a range. You're not looking for exact movement because you can move down 10% and still make the same amount of money. You can move up 10% and you still make the same money. That's a lot easier. Now, let's say you think, well, things are going to be worse. Well, you could give yourself a little more range on the downside. So let's say I go ahead and go to the 280, and over here we'll go to the 290. So now I've created more room on the downside. Now I only make $227 overall on $773 on investment, which is still pretty good. So I make a little bit less, but I have more room. So it's a give and take relationship in the market. And you can see now that stock needs to drop to about 290. Basically, let's say 290 is our short. So it needs to go down all the way to here, which is coming down to the April lows for us to lose out. And the upper range that we're in is right around 450, 460. So it would be way up here. Okay, so you could play this range right there in that stock in the next 45 days. And that's a lot easier to do than just choosing a stock and trying to manage that position. Now, many people get tripped up with, well, where do I make an adjustment? And it's again going back to that bicycle riding concept. It's about learning how to shift gears. Now, in this case, you might say, well, we got this box. Well, where do you make that shift? Where do I make that adjustment? Where do I make those tweaks? And you could say, I don't understand where to make the tweaks. And by doing things time and time again, you'll get that experience to learn where to make that adjustment. But if you actually look at this, kind of like a ceiling that's way up here, And this is your floor right here, your tile floor. And think of this as like your wall. So when you have your wall and you're looking to paint your wall, well, where is it that you're going to go ahead and make a little bit of a slowdown, right? So let's say I take out a roller and I'm rolling my wall and I'm trying to paint my wall. Give a roller to a kid, well, he's just gonna paint things all over the place. He might go on the floor, things will drip on the floor. He might go on the ceiling, he might move to another wall, right? So if you have kids, you understand the concept. But if you're trying to paint your wall, you're slowing down as you're starting to reach a little bit higher or closer to the ceiling, because maybe that ceiling has a texture, maybe it's white and you don't want it to be a colored ceiling. So again, as you go up, you're slowing down, and that's where you would make your tweak in your iron condor or an adjustment. As you go down closer to the ground, the same thing. Okay, as you're reaching this level, let's make it orange. Okay, so as we're reaching these levels over here, we'll make a tweak. Okay, because we're getting closer to our danger zone. Okay, we're getting closer to an area where paint could spill or paint get into areas we don't want. And this is what you do with options when it comes to iron condors, is you're looking at that range, and as a stock is behaving in a nice range for you, in a sweet spot, when you're painting the middle, right, you could paint and go wild and crazy and not worry about it. Because maybe you have a cover, there's a lot of distance there, you're not worried about hitting the baseboards or the ceiling because you got a lot of room. But as you're getting closer there and you're painting, you're watching intricately so to make sure that the blue color doesn't go on your white ceiling. And that's what you do when it comes to iron condors, is the same thing. You're looking for this little area where this is where you make those adjustments, the tweaks, going out and closing out some of these positions or reducing those positions. And a matter of what and how much is some of those things that we'll cover in the course. But this just shows you how much easier it is when it comes to knowing and understanding the trade of an iron condor, because it's not about finding the perfect stock. You could trade the same stock over and over again, and all you're doing is you're looking at that range. And when things get a little bit tight on a certain area, let's say over here or over here, and you're getting closer to that ceiling or to the floor, now you need to make a tweak or an adjustment. You might go ahead and add a little more positions on one side. So now you'll become a little more positive or bullish on the stock. So you'll be a little more weighted, let's say 7 contracts on the puts, okay? You might do it a different way where you're a little more heavy on the calls, where now you're looking more at a downside move, okay, and a little bit more that way because you're getting closer and closer to this area, so you have more risk, so you're adding favorable risk, things that have worked out for you very well on the upside. And this is what it's all about, is tweaking your prices and ranges and learning how to deal with those. But all you need to do when it comes to trading iron condors is really picking a range. It's not about choosing the right stock. You could trade the same stocks time and time again as long as they're trading options. You're choosing the range. Yes, they are more complicated, just like riding a bicycle uphill with gears is more complicated. But once you learn how to shift gears, once you learn the appropriate way to do that and when to use those gears, riding uphill, riding downhill, riding in the mountains, makes it much easier than when you have just a single gear bicycle. And that's really what it's all about when it comes to trading options, is when you get the knowledge, when you get that little bit of extra education, you can now see that, well, you can make money through time decay and time value because you're selling insurance. And with time, the white line, which is the current line or today's line, gets closer to the green line, and you're collecting this theta, this premium, from your decay. And can you get out of this earlier if you want? Let's say you're up $85, $90. Can you get out of it earlier? Absolutely. As time gets closer and you're still in that sweet spot, let's say you're up $228. Yes, you can still get out early if you want, and then you can reset and put on another iron condor another month out or 2 months out if you like, because you're collecting that premium, you're collecting that theta from that time decay. And all you need to do is choose a range. You don't need to choose a stock. You don't need to wait for when to get in. It doesn't matter if you get in a couple of days later, a couple of days earlier. Now, yes, there's some favorable situations where you might want to get in on certain days, which we'll talk about in the course, but overall, it's not going to affect you that much because you're choosing a range in the future. You're choosing a range, whether it's kind of more in the middle, like let's say over here, and you'll choose a range right more in the middle. You might choose a range that's a little bit more lower, or you might choose a range that's maybe a little bit on the upper side or upper heavy because the stock's a little more bullish. So it's really just about choosing kind of your range or sweet spot of what you believe the stock will do in the next 30 days, 60 days, 40 days, 80 days, and you get to choose the time frame. Now, I wouldn't go too tight on the time frame because the shorter the time frame, the less premium you make. For example, in this situation and in this case, let's just take a look here what we have. We have two contracts on the puts and on the calls, and you're going to make $470 on $1,530 of investment. But if we go out to, let's say, September, okay, and we go up to September here, what you'll make is $614 on 1,386. So you can see 614 on 1,386 versus 470 on 1,500. So you make much more money if you go further out, but you have to stay in the trade a little bit longer. So anyways, I hope this shows you the power kind of iron condors and really how easy it can be compared to options. Now, I'm not saying it's totally and completely easy because there's a lot of work still involved behind it. There's a lot of knowledge that you need to know and understand. Just like learning to ride a bike, you got to get that knowledge. You need to build that education. But it's a lot easier than, let's just say, hey, I got to figure out which stock is the best stock. I got to figure out when to get in the position, when to get out of the position. In this case, what you're doing is you're setting up a position range so that way that stock has room to wiggle and you collect your theta and premium decay. There's still a lot of work that goes into it as far as learning this. There's a lot of time. You got to learn when is the appropriate time to shift gears. So that goes along with when do you put on the iron condor. And some of these things will be covered in the course. And that's what the course is really all about, is to fine tune those things. When is the optimal time to shift your gear? When is the optimal time to shift to a second gear, a third gear, make the adjustment, make the switch. And that's really what we'll hone in and cover in the material. But really here with iron condors, it's about the range. It's about choosing a range rather than picking a stock that, is going to go up or down. It's not about a direction. If you can pick a range, that's what it's all about, trading iron condors. Now, if you want to go ahead and sign up to the newsletter list where you get notified when the iron condor is released, which is going to be the 16th of July here very soon, and where the sign up location is and where you can purchase it, then get on the newsletter list by clicking the button right here and you'll be sent those notifications. But if you want to just hang out on YouTube, just see some of the other videos that we have available, then go ahead, subscribe by clicking my face right here. Thanks for joining me. In the end, remember, there's more to life than money. Go out, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.